What is going on, you guys? My name is Alex, and I'm a 22-year-old trader attempting to master the stock market to potentially one day join the very few who make a living out of this. In today's video, I'm going to go over an easy way to track your trading progress and really measure yourself as a trader and see where you stand in terms of your trading skill level. This is something every professional trader does, or at least every good trader. Why do they do this? Well, the reasons are so obvious that after watching this video, you'll probably almost immediately start doing this yourself. So not only does this process tell you the type of trader you are and show you exactly what you need to work on to get better, but it also shows you exactly how good your strategy is, or if it's even any good to begin with. So in other words, what I'm about to explain to you guys is not only going to show you where you stand as a trader, but also where your strategy stands. So I'm just going to tell you guys straight up right away, you need to take 10 to 12 of the best trades possible using your strategy or your trading system, whatever you want to call it. Now, before you go ahead and take any trades, there are some caveats I need to go over. And first one is 10 to 12 trades is the bare minimum. If you toss a coin 10 to 12 times, there'll be some sets of 10s that will have 7 heads and 3 tails. In fact, in some rare cases, you'll see 9 heads and 1 tails. So you can't be so sure that your first set of 10 trades is reliable. In conclusion, the more sets of 10s you have, the better. And in even more words, the more data, the better. The second caveat is that it's much easier to analyze yourself and see where you are as a trader than to see where your strategy is. In fact, you need to see where you are as a trader before you can analyze where your strategy is and how it works. The reason is because you need to take almost perfect trades that follow all your criteria, whatever it may be for your strategy, in order for you to say, okay, well, here's the win rate, here's my average profit and average loss, here's what works and here's what doesn't. These are things you get when analyzing your strategy, so you can probably, if you ever need to, tweak it or adjust it to market conditions. But for most traders, you simply won't be able to execute a flawless set of 10 trades. Now, this doesn't mean you shouldn't try. In fact, you should give it your best in these next 10 trades. And if you fail, you may ask, well, this is literally the point. Just continue where you left off and document your mistakes. This is absolutely crucial because whatever mistake you made is going to be the dragon you need to slay to get to the gold, your typical hero's journey right there. The third caveat is pretty straightforward, and that is that you need to actually analyze your trades. So to make things easier, I'll show you guys a couple of examples on how I analyze my recent trades and how I actually track my trades using a simple spreadsheet. So let's get on to it. All right, so arriving at our spreadsheet here, you may be overwhelmed, and don't worry about it. This is pretty simple stuff. We have the ticker here, the bias, which is the short or long, either we're buying or selling, the share amount, the entry price, our exits, our share quantity, and the P&L, which is going to be the main focus here, the fees that we pay, the date of entry and the date of exit, as well as the time of entry and the time of exit, and then other good stuff over here on the side, which is the stop method that we use, details, comments, ratings, moving averages, notes. So this is really the bedrock of our learning experience here when we track the stocks here, but we'll get into that eventually. But first of all, I'm just going to mention that this is going to differ in terms of just your trading strategy. Maybe you guys aren't even trading stocks, maybe you guys are trading futures, forex, whatever it may be. There will be some differences here, but the fundamentals, the basics are the same thing. So before analyzing anything, you need to know how much money are you willing to risk. So ideally, you would already know your strategy. I'm going to assume that you guys are perfect traders because, again, that's the very first step that you guys should be focusing on, just executing your strategy flawlessly. And even if it means simplifying your strategy to like a very basic candlestick entry, for example, if you're like, let's just look back at the chart and just to give you as a quick example, maybe you guys are trading the daily time frame here like I do. So a very basic example of this would be a initial crossover of the 20 EMA, so or the 20 moving average. As you can see, we have the 20 moving average as the baby blue right here. And let's say a very basic entry would be you enter long on the first crossover of that moving average. So for example, it would be right here. You would enter long the next day, either the next day or at the end of the close of this session right here, which would be this candle right here. So you would enter long as soon as the price closes over. And then let's say your stop loss could be the very low of that current candle, or if you entered in the second candle, it could be the low of that candle as well. So just a very basic system like that would be better than not using any strategy at all. So if you have to bring down your strategy and simplify it to this point, like this, just simply using a current candle entry as confirmation, crossover, and stop loss very simple, just under that candle. Whatever the case might be, if you have to simplify it to that degree, please do so if it means that you have to follow your rules. Another thing to know before you analyze your trades here, assuming that you've already taken a perfect 10 set of trades here, is how much money are you willing to risk per trade? With that being said, I am risking 1%, which is roughly $1,000 on this account. On average, I probably average around $1,300. My average losing trade is probably $1,300. If you really look at it here, I could probably actually use the calculator to analyze it, but I'd have to get rid of the winners. But either way, it looks like it's roughly around 1,300, give or take. So you wanted to keep that in mind, how much money you're willing to risk. In my case, is 1,000. And analyzing, so just taking a look at the P&L real quick, you'll notice that all of them are pretty much at that sweet spot, 1,300, 1,200. Obviously, you're not going to lose a perfect $1,000 per trade. It's never going to be that perfect. You're always going to lose a little bit more or a little bit less. But there is one trade that sticks out like a sore thumb, and that is this trade right here, $1,700 loss. These are the trades you really want to be focusing on, and comparing comparing them to your winners or just comparing them to any average losing trade, because not all losers are going to be something to look at for mistakes. Some trades aren't always going to be your fault. It's just going to be the market doing its thing. You're never going to be right all the time, so you're going to take losses. Some losses are just going to be you just simply can't win them off trades. You could call them like that. But some trades, there are a lot of things to learn about, and you should analyze every losing trade as a matter of fact and determine if it's a trade that you could have done better on or the market just simply didn't want to give you that win. Obviously, you can't win them all. So $1,700 loss. This is obviously a big trade that something went wrong. I had already analyzed all of them, but I think this is going to be the main focus, comparing PanW, which is Palo Alto, a long trade, 240 shares. Here's our entry, our exit, and it lasted 1 day. So that's already telling you that there's something clearly wrong in this entry right here. So once you've located your worst example, which in this case is PanW, $1,700 loss, you want to do the exact opposite for your winner. So the best winner we have is Netflix, lasted about 20 days, so that's pretty good in contrast to the 1 day that the PanW trade lasted. Netflix $4,000 trade, that's the one we're going to be comparing it to. Of course, you could do this with other trades, like we got 2 other average trades here. But we'll do it with the big one just for the sake of keeping things simple with a massive winner and a pretty big loss right here too. So let's go ahead and jump into the charts here and break down the technicals and a little bit about my strategy as well. So first of all, as you notice, we have Netflix on top, the big winner, PanW on the bottom, the big loss. And let's go over Netflix first of all. We have 2 arrows here, the first one being the first entry, the second one being the second entry. Now it's pretty rare for me to enter twice on a stock, just simply because I need to see the exact same setup occur consecutively twice, and that's pretty rare. So this is a good trade. I mean, even without this additional entry, we probably would have profited around $2,000, $3,000. But definitely this second add was a big addition and really a boost to this trade right here overall. So first entry on this aggressive candle as soon as we broke. The only thing wrong with this setup right here, because obviously I'm not a perfect trader yet, but the only thing wrong with this is that it was a simple 1 point, 2 point, actually 2 point right here, breakout. So if you're not familiar with my strategy, I look for ideally a minimum of 3 touch points and then the break. And in this case, we only have 1 touch point. 2 touch points. You could say, to be quite honest with you guys, you could say that this little candle right here is a touch point, but it's not exactly an official touch point because it's not touching it. Although this previous candle before the entry it is touching this line here. So that's the second touch point right there. And I should mention, before we dive any deeper into this, if we look over here at our details, you will notice that I have 2 touch points. So 2 TP. That's essentially what I'm talking about right there. 2 touch point break. That's the only thing wrong with this setup with this trader. The only thing that was wrong with it. Other things that I do check out is the entry bar. So the confirmation. The entry bar was a strong aggressive candle, so that was good. The market was red, we're going short, so the market was in our favor. Not only that, but we had good data. What that means is essentially that the trend was a mature trend. If we look back in time, you'll see that this trend has been active for about 6 months now, since the 4th, January, February, March, April, since April, and it is now November. So a lot of months here really express the maturity of that trend right there. And then moving on to the right over here, we have the moving averages, which the 20, the 50, and the 200 are in our favor in this trade here, so that's great. Notes over here to keep in mind that all the moving averages were pointing down sharply, so that's insanely good to look for. And let's go look back at the chart again. Looking at the moving averages, all of them were pointing downward. As a matter of fact, if we look closely at the entry bar that we entered, this red aggressive candle, which was our entry bar, the price had actually barely touched the 20 moving average here, but we just bounced off of it. So that was an insanely good setup right there, good entry right there. It was a flawless entry right there, not gonna lie. But the next day that followed, we actually went up a little bit. We just pretty much went sideways, slightly up, and then we actually managed to touch that 20 moving average again, and then we came right back down. So this is where our second entry was. Everything was perfect. Moving averages were all pointing downward. Price wasn't too far from the moving averages, and you could kind of even tell that we kind of had a head and shoulders here. We have the left shoulder, the head, and then the right shoulder, at least for the second entry. As of the first entry, it was just a pretty good entry right there, a little breakout below the 2 touch point trend line right there. So aside from this trend being 2 touch points, it was a flawless trade. I mean, just looking back over here, you could already tell we've been coming down for a pretty long time already. So we had the trend in our favor, and then we actually managed to break the even bigger trend over here on the bigger picture. And yeah, just for those reasons, this was a flawless trade, except for that one little mistake that I did on my part, that it was 2 touch points. I mean, you could maybe consider this one a third touch point if you really wanted to, but I mean, even if you did, that would be a flawless trade. But if you didn't, that was still just a 1 check mark that I didn't check off of my list of criteria that I need before entering a trade. Now, that's Netflix right there. Flawless trade right there. Now let's take a look at PanW over here. Palo Alto on the bottom, just so you guys could really, yeah, I'm trying to make this bigger, but it doesn't seem like I could, so that's fine. Let's zoom in a little bit. This was a long trade as opposed to shorting over here, so I was going short. And I should mention that these are daily time frames, so every candle represents 1 day worth of time. I am a swing trader, so I only trade off of the daily time frame. PanW, instead of going short, we're going long. We entered on this. As you can see, we have the little arrow here pointing on this green candle right here. And aside from the price being being above all the moving averages. Everything else looks pretty bad, not gonna lie. I mean, you do have a head and shoulders. I don't even know how I didn't see this, to be honest with you guys. We have the left shoulder, the head right here, and then the right shoulder. This looks way better than the previous Netflix example right here of a head and shoulders. This is a prime example of a head and shoulders, actually. Not only that, but if you really pay attention to the moving averages, you'll see that they're kind of sloping sideways. They're not even really pointing upward, as opposed to this over here where they're pointing sharply down here. And I would mention that the 200 moving average here, I don't really use this in terms of my entries here. The thing that I do use it for is my target. So this is more of an investor, the big whales, the people with big money, long-term investors use. The only case where I would use it is simply for my targets. So you could ignore that for now, but just look at the way these moving averages are sloping downward, just pretty nicely and aggressively almost. Not that I've seen more aggressive slopes right here, but really good nonetheless. And then you compare it to Pan W, who are just going sideways right here, not really doing anything. So if we look at our checklist over here for our little criteria, Pan W, it is a 4 touch point break. So that's a good thing. That's probably the only good thing, that it is 4 touch points. But the entry bar was a weak entry candle. If you look at the candle that we entered on, I mean, you can't, I mean, this is barely anything right here. And I know it's a joke right here. This trend is a joke right here. This is literally like 10 days worth of trend right here. And then you get this little break right here with this weak candle. So yeah, compared to this over here, aggressive red candle, massive mature trend that is broken. And then right here, you have a weak candle, only 10 days worth of trend right here. That's not a mature trend enough. And then the market was green, so that could be another positive right there. Low data, we did go, so let me go back to it. Green market, the general market was green, and we are going long, so that was a good thing about it. So besides it being 4 touch points, it was a green day right there. So those are 2 good things. But low data, the 20 and the 50, 200 are in our favor, just simply because the price is above the moving averages and we are going long. So they are in our favor, but the moving averages are flattening. As you can see here, I did put they're flattening. Head and shoulders poor. So these are the reasons. This is the bedrock, like I mentioned earlier. This is the bedrock of your learning right here, and these are things that you need to analyze. You could obviously extend this to way more criteria, like using RSI, the MACD, whatever you want to use. But in my opinion, just keep things simple, and you'll find it easy for you to stick to. Keep things simple. Just keep things simple, and as time goes on, you'll be collecting good data, and it shouldn't be too hard of a job, of a task right here, since I mean you're really only collecting minimal data right here. In my opinion, you could make it a little bit more easier, maybe just using the moving averages and gathering data on the moving averages. You could ignore all this over here, but I find this, in my opinion, to be perfect for me at least. So you determine what you want to use and what criteria you want to gather data on, and just go ahead and do it. But remember to keep things minimal, keep things basic. If it's too hard for you to follow your rules, or maybe it's becoming challenging to take notes and gather information on the details of your entries, if you find it difficult, just bring your criteria down, simplify things more, and that's going to be it, you guys. Let's look back at the charts over here again. Beautiful trade right here, $4,000 profit, and then Pan W, just a terrible entry right there. And I should mention that this is very important right here. I could probably already get rid of these right here, but this is another example of learning from your trades right here. So I'm going to keep these trends up here. I'm going to keep these trend lines up here just because they could be potential entries in the future, but I want you to focus on this particular line right here. I'm going to draw it red actually for you guys. Nope, never mind. I'll draw it blue. So we have a 1 touch point, 2 touch points, 3, 4. So this is a 4 touch point setup, and then this just happened 2 days after we actually the next day after we got taken out of this trade. So we ended up going short on this trade. If we look back at our numbers over here, and yes, there's a baby crying in the background, but let's try to ignore that. So this is the big loss here, Pan W 8,700. But then we re-entered 2 days after, or the day after we took our loss, and we ended up profiting. But this is a mistake that I did on my part right here. I'm going to explain to you guys why. So we entered on 1113, which is that aggressive red candle right here that we got. This is a perfect candle. I mean, just compared to other candles, an aggressive red candle. The moving averages are sloping. They're starting to slope, to be honest. They're weak. They're looking weak. So we are expecting it to move to the downside. And what do you know? We did get an aggressive move to the downside. As you can see here, let me just try to fix this for you guys. We got an aggressive move to the downside here, but I did not do my job properly. So I was trailing this with a counter trend here, and what you call this is simply a trailing profit method. So you want to trail your profits as you make profit, pretty much. So ideally, you would have taken your loss at this point right here, or actually in this candle right here. I'm not going to lie, in this candle. But where did we take it out? Well, let's find out. Looking at our spreadsheet here, we see that we took our loss on December 5th. So let's see on the chart where that's at. December 5th. Yes, it is on this candle over here. So I should have taken my profit actually, because we're in a profit at this point here on this green candle, but instead I took it over here right when we crossed the 20 moving average. At that point, I knew I just had to get out no matter what, regardless of the situation. But it was my mistake. I should have just literally closed it right here. I was literally trailing this using this trend line, this small little steep counter trend line here. I was using it as a profit trailing method, and I should have gotten out on this green candle here, but instead I decided to let it give it some space and just wait until then. But that was a big mistake on my part. That's probably the only time that I've done that actually. All the other ones I've been keeping them on a leash. For some reason I just thought this one would have continued to the downside. Unfortunately it didn't, and I ended up giving back around $700. I believe we're up like a little over 1,000. So I ended up giving $700. That's just an example of how, well, yeah, just analyzing your trade, looking back in your trades is insanely helpful because you get to learn things like this, like things you could have done better and things you also could have avoided. And that's going to be it, you guys. If you guys need help on learning the strategy, you want to know exactly what I'm trading here, well, I actually do offer my strategy here completely for free. As a matter of fact, here you go, take it. You could get this anywhere on the internet. You could create literally your own strategy in a matter of seconds. But here's my strategy from a psychological perspective. If you want to read a little bit more about it, and if you want to learn more about it, just in a more detailed version, well, just go ahead and join. It's completely for free. Don't feel pressured. If you join, feel free to leave at any time you like. And I also do want to mention that I do offer an apprenticeship here for those of you guys who are interested in getting a mentorship by me, completely free. Again, why is it for free? Well, I simply want to get better at teaching, and the only way you get better at teaching is by teaching. So I also do want to build some credibility amongst the community, so that's another reason. But for now, it's completely free. And also, I do only have like 10 or 12 people on this Discord, not much of them trade, so it'd be nice to have some of you guys trading here with us. I do also offer a watch list every single day in the mornings. Like for example, Google here was a nice little breakout. Actually, it hadn't broken out yet, but it was definitely on the watch list today. Another one was Nvidia. Nvidia was also not breaking out yet. But it was near. As you can see, the moving averages are kind of starting to slope down below, hinting that you could see a potential downward move. We also do have a similar head and shoulders here, left shoulder, head right here, and then some shoulder forming right here. So potentially a downside move could continue. Yesterday I actually did. This guy's actually good on this guy for calling us out, because yesterday this was actually yesterday's watch list. As you can see, we zoom up a little bit. We see we got 5 stocks here: PanW, Uber, and he did mention that 4 out of 5 were spot on. So yes, today was a pretty good day in terms of the callings that I did yesterday. But I did let him know that PanW was one I tried to take yesterday, but unfortunately couldn't, simply because I lacked the margin to afford it. I currently have 2 positions right now that are up 885 and then $77. Pretty much break even for Microsoft. Costco, we're up nicely, but these are pretty much taking up all my margin, so I can't take any more trades, unfortunately. Yesterday I did miss out, or yesterday I missed out on taking any trades, and today I'm seeing them play out properly. But of course, that's why I offer this. So for some of you guys that are looking for trades like this, similar to this system or strategy. Something else I did mention was look at the moving averages. They're all streaming sell as of PanW, which was one that I was going to take yesterday, and as a matter of fact I did try to take it. If we go back to our chat, you'll see here that I have multiple sell orders, but unfortunately my margin couldn't cover it. So yes, every day I do send out my trades at around 12:50, which gives you guys around 5 minutes to actually take a trade, and that's pretty much the time that I get as well, so don't feel bad. 5 minutes is plenty of time. But yeah, like I said, I couldn't take any trades yesterday, unfortunately. And again, going back to the moving averages here, like I mentioned, look at the moving averages. They're all streaming sell. Let's look at PanW, see if we can find it here real quick. PanW was one that I loved PanW yesterday. Yeah, so exactly the same thing. Look at the moving, look at the 20 moving average here. It's just screaming downward, and you probably can't really see that well, but this red candle that formed yesterday actually bounced off of that moving average, so you should expect an aggressive move to the downside. So beautiful opportunities here for you guys to take. And yeah, so I'm just going to finish it off with something I also mentioned is anyone can call winning trades. The hard part is executing the plan over and over and over again, over hundreds of trades. That's the real challenging part right there. So that goes back to what I was saying earlier. 10 trades is the bare minimum to take. You're going to get something out of those 10 trades, something good to know. In reality, you probably need 100 or 200 trades to really solidify your trading system, solidify yourself, and really master the market. So that's the challenging part. That's what we have to deal with every day. And if you want to join, link is going to be in the description. Make sure to check it out. And that's going to be it, you guys. I hope you guys enjoyed this video. Hope you guys learned something. And if you did, leave a comment and subscribe. You guys stay focused.